Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to a new week. On Friday, the market wrapped up to a stronger stance for the Australian dollar as the US dollar index, which measures the greenback strength against a basket of six major currencies, tumbled back to a 2.5-month low. Following the one-day holiday in the US in observance for Thanksgiving Day, the market was somewhat weaker in terms of the fact that the dollar index is still on course to take its challenge lower after breaking 103.80 last week with an objective of 100. This in turn should support the Australian dollar to head on through 66 cents and on towards its objective of 67 cents. The euro has also benefited from the last couple of days of strength due to the weaker US dollar and now looks towards its objective of 110. In economic data on Friday, the US flash S&P Global PMI for November was unchanged at 50.7 versus the forecast of 50.4. Meanwhile, the services PMI rose to 50.8 in November from 50.6 in October. Looking ahead to this week, the US docket holds to consumer confidence, GDP in the US, and also the ISM manufacturing PMI, but the market will be keeping a very close watch on the US Federal Reserve Chairman Powell and also the US Federal Reserve's preferred measure of underlying inflation, the core PCE price index. Along with that, we also on Friday had the ECB President Christine Lagarde, who also warned that it was too early to start declaring victory in the fight against inflation and would allow some time and see how fast disinflationary forces take effect. So as I mentioned, the top side looks towards 109.90 to 110 and the break there will get an extension onto 111.15. As I view, the US dollar should continue its path on the downside, which should support the euro. If the dollar does keep on a downward path, then dollar yen should continue as well after recently breaking down, but found bullishness towards the lows of 147, and that is the posted dragonfly doji. In light of the pattern though, I still feel the downside potential does hold towards 144.5, and any upside attempts should be contained by the resistance somewhere around 149.70 to 150.15. Sterling outlook still remains strong after Friday's rally, posts a fresh multi-week high and clears the resistance of 125.60-65 and closes the end of the week in positive territory. Trading mood was calmer as the UK inflation continued to show signs of cooling down. However, all eyes will be looking to the Bank of England Governor Andrew Bailey's talk this week. Along with that, still keeping an eye on the US as well and Fed Powell's speech on Friday. Viewing the technicals though, I feel with the clearance of 125.60-65 should see a rise now towards 126.40 and maybe even extending to the core around 127.45-70 area. I do feel this pattern is relatively bullish and ADX supporting the trend and also the other indicators are also locked in play, should keep the positive bias continuing. Gold reaches its objective of 2,000 and now it looks like it can actually squeeze a little bit higher, and that is on towards the region of 2016-18 area, possibly squeezing to 2030. This is to me likely to be a bull trap. This is a squeeze since the posted hammer that we saw here posted back around the lows seen at 1,914 to 20 area. However, the market's still relatively strong, and therefore I can't rule out the upside tests. But like we've seen in the past, gold, when it turns bearish, is very fast and furious, and therefore keep an eye on how the markets may perform closer towards that top side of 2020, as we could see another downturn. And wrapping up with oil, the market still seems to be somewhat rattled after the announcement last week that OPEC has moved their meeting from the 26th of November to the 30th. Still, it did post a weekly gain, but the market still looks a little bit mixed. In the view of the broader contents, I feel the market may actually back away slightly, but still holding in a broader parameters of 74.5 to around 79.25. But in light of this pattern here's choppiness likely to continue into this week until we get closer towards this meeting on the 30th of November. Well, that's a wrap for the start of this week. Thank you very much for joining me. And as always, look out for the internet report. I hope you enjoy the great start to the day.